Hey, how's it going, Option Sharks? This is your option coach here. Today, I'm joining you on my terrace, overlooking the view, the Pacific coast. It's a bit cloudy today and quite chilly. It's summertime. I'm actually wearing a sweater. Very strange. The past week, we've been getting a lot of sun, and today it's about 68, 67 degrees in the afternoon. Today is the 12th of August, and yeah, we're like in the heart of summer. I know other parts of the country is very, very hot. But either way, I'm nearby San Diego. It's a bit chilly today. Very strange weather. But anyways, this video, I want to talk a little bit more about not getting yourself in trouble and not getting yourself into doing revenge trading where you are trying to recover from a loss, and now you are upping your risk, taking on more risk than you should, trying to recover your loss, right? So we call it revenge trading. And also having a protocol, right? Following protocols, following a checklist that you have, getting accountability, getting coaching. So this way you got your emotions in check and you are heading on the right course, right? Sticking to the plan. The market is a bit frothy, I have to say. A lot of stocks that have ran up today, seems like investors have been taking profit. So you'll see a lot of stocks, for example, like Hood, a few other tech stocks. Investors have been taking profits. So tread carefully, and the CPI numbers have already passed. It was about 2.7%, which is okay. And then we have the PPI coming up tomorrow. So that's going to be some important numbers. And then of course the unemployment claims. And we're looking at September for a rate cut, right? So the way I look at it, if the unemployment numbers are not good and the inflation numbers are in check where they are still the same and not going up, then the Fed is more likely to have a rate cut in September. Now, if the inflation is not in check and is creeping up, then the Fed may keep the rate the same to battle inflation. So it could go both direction. I think right now, based on what I'm seeing, inflation should be still in check. Now, the unemployment numbers, if it's not good, then we can expect the Fed to step in with a rate cut. So pretty much, when it comes to trading options, you want to just have that checklist, that protocol, stay focused. And also, there's times where, you'll be in options jail. So what is options jail? Options jail is when you have a position you roll out and you're kind of underwater, you're holding the bag because of a correction or a pullback. And now you need to wait for the stock to recover. You have to exercise that patience and wait for the stock to recover before you begin trading again until you get out of that trade. Because if you start doing other trades, you may end up digging yourself a deeper hole, right? So sometimes every now and then you're going to be in options jail. That's just part of the game if you are trading in the market. And you just got to hang on to those positions until they recover and then get out of the trade, and then you're back in the game. All right, so there's nothing wrong with being in the options jail and knowing that you don't want to dig yourself a bigger grave or a bigger hole by doing more trades when you are waiting for recovery, right? So it's like, doesn't make any sense. If you play sports and you have an injury, you're not going to get out there and try to get back on the field. You want to spend that time to recover so you can come back strong. All right, so either way, just a little bit about psychology and accountability and checklist that I want to share with you guys today. And then if you do enjoy my content and you are in the markets, you want to learn how to trade options, or you're already in the market but you're not generating at least 3 to 10% per month, I'll be more than happy to help you with that process. I only provide one-on-one coaching. It's very hands-on, side by side, answer all your questions about fundamentals, technical analysis, and strategies. And we have a community that's there to support each other, like-minded people. So if you do have any questions, just leave a comment. I'll always respond. And then like and subscribe, of course. And then stay tuned for the second half of this video for a live actual sample coaching call I will do with one of my option sharks. All right, so I wish you a fantastic day wherever you are. And then I'll see you on the next one. No, that's it. Yeah, right over here, 87. Even 93. So let's just look at 93. Wow, 80. This that much premium just is insane.
So
Yeah,
what was the
look at this.
expiration date
You
on
can
that?
do a 90. 90, actually 85 would be better. $200 per contract. Okay. So that's something you can consider if you want to deploy that. That's a 30-day wait though.
Um,
Yeah.
and so you can maybe see if I'm following. The only thing I need to understand is how do you derive the expiration date? Because I can't. I mean, you're looking at something else. Like you're looking at Robinhood, right?
Yes.
So I could do that on Yahoo Financial, or it doesn't seem like this is providing all the data on this. It's just this is for trading, period.
This is for trading. Yeah. For data, you want to use Yahoo Finance, which is
Right.
what I
Okay.
use to look at the technical analysis, fundamental analysis, all that good stuff. I can
And
show
then
you how
that
to
way I
set
can
up.
look at the expiration date.
Yeah, I can show you. Oh, the expiration date, you can look it on Schwab. I don't know how the platform works. I just look at it from Robinhood and then go from there.
Yeah,
But
I
you will
could
need
do
to
the
play
same.
around to see how you can look at there is a section where you can see everything.
And the
Um,
options are going to be the same price on either platform, right? I
all
mean, it's
platforms the same, all the same. Yeah,
so I could just have my phone. I could look at Robinhood, and then I could just put the trade into here. That'd be really easy.
correct. All right, so cool. Yeah, so with this sell to open, right? 85 strike, 815, $200 per contract, 50K, right? So you just 50,000. What's the strike? It's 85. So what's one option collateral needed to do Credo?
Collateral on this.
Yeah, one option contract collateral needed to run this trade
So I have
at
to
an
go buy
85 strike.
an 85. So 85. So $8,500.
That's right. So then 50K divided by 8,500, that gives you about six contracts. So you can
Got
go
it.
to
Okay.
quantity and then put in six. There you go. And then, yeah, you get about 1260 here.
So in the
Significantly more.
first
And the
month, I'll
reason why
make.
this is more, $200 per contract, is because it's a 30-day expiration.
But you like it though,
This is very good. It's a
and you
no-brainer.
already. I mean, I've been watching your videos. So you put this through the Bollinger Band and all that. You went through that already on Yahoo
Correct.
Finance.
Correct. I just went through my Yahoo Finance and just looked at where the support levels. And actually, we went below the support because support's at 87, 88. Actually, to be exact, 87, 87.50. And we're doing the 85 strike. So that's below the support.
So I get right there with those two trades. I could pay your commit your
Yeah, so I'm telling you, when you have a big portfolio, guys that I work with, like Mr. James and Mr. Arvin, they have $1 million portfolios. They're making 50 grand per month. They only pay me like five, 6 grand. It's like it's a no-brainer for those guys. They're just like
right.
they just want to know if I know what I'm doing and make sure that I can help them with this process, right? And then
Right.
I just show them my expertise and what I have done, and they're like, okay, let's just do it, no problem. And then, yeah, in the first trade, they're making money, and and both of them know how to trade options, but they like having me as a accountability where they because sometimes you miss something you don't like. You're looking at your portfolio. When you look at your portfolio, you see what you see. When I look at your portfolio, I see something else. And I'm saying, hey,
Right.
did you see that? Did you catch that? Oh, that's not looking good. What's going on here? Blah, 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 blah. Right now, he has a feedback loop. So having me there as an insurance guy there, like a second look, actually saves them money. Actually, Mr. James ran into a situation where he did a trade and he didn't know about the in the money put roll. So he's like, shit, I need to get out of the situation and show me how to help me with this. So I helped him
Right.
with the process, doing in the money put, and then we were able to salvage the position and be in the green, and then we still have to let time pass and navigate out. Okay,
Right.
that's why like even if you like you got to spend at least like 4 years to really like just be on your own and just whatever, right? So that's why most of the members that I work with that have larger portfolios, they just keep me there as like their financial advisor. Like they just delegate this part to me and I help them trade. Because in a year they make 100 grand or more, paying me like 6 grand or 12 grand if it's 1 year. It's like it's a no brainer. It's just
Right.
there's no
And
thought
I'm down with
behind it.
that. You know, if
Yeah.
I have someone that I can call if I feel like I got in trouble and I have someone I can hit up and say, like, look, what should I do? You know, like I Like I didn't know
Yeah.
about rollovers, and I watched one of your videos, and I probably could have done so many rollovers in the past that I didn't do.
Yep. Rolling is how you uh, avoid losses and collect more income, break even, or minimize your loss.
Right.
There's only three things that can happen in a roll. You profit from it, you break even from it, or you minimize your loss. There's
Cool.
only three. But you had to know when to pick which tool to go and what day and what expiration due. So we haven't got to the point where we need to roll. So
Right.
it probably won't be for a while. But yeah, but that's pretty much it. That's
That's awesome, dude.
it's very boring. It's a simple process. But the most important thing for you to learn this is repetition.
Right.
It's the
And,
reps.
and getting systems in place. Exactly.
Correct. And also know what to look for and what I'm looking at.
Right.
Okay. So